Hello, this is Imi from iTradeAIMS.net. The three AIMS indicators. So as we know, we have three indicators. The AIMS indicator number one, the box, then we have the wave, and we have the gator. And of course we have an AIMS entry alert. In this tutorial we are going to learn about what is AIMS Gator. So AIMS Gator is derived from Bill Williams' indicator, the Alligator, available in MT4 as standard, and you can find it in other platforms as well. The Alligator is a metaphor as well as an indicator. So AIMS Gator is an advanced version of that indicator because it has a fourth dimension. So the Alligator gives us the trend direction of the current time frame, but the AIMS Gator has this added line that allows us to be in line with the 5 times higher time frame. And we have another version of it. So normally you'll get the version 5.1, and you won't believe we have the same code that we have been running since 2012 or 11. So there is really no reason to change it. It works. So where did it come from? Well, a legendary trader, Bill Williams of Profitunity.com, an early pioneer of market psychology, developed the trend-following Alligator indicator, which follows the premise that financial markets and individual securities trend just 15 to 30% of the time, while grinding through sideways ranges the other 70 to 85% of the time. And that is very true. So this is what Williams thought. And Williams believed that individuals and institutions tend to collect most of their profits during strongly trending periods. This is according to Investopedia. And this is so true. Markets usually go sideways. But if you trade intraday timeframes, you will find, or you will know if you trade with us, there are times where there's a higher probability of market moving, so we don't need to worry about that. But this is true for, let's say, daily and weekly timeframes, overall markets. There is scientific research behind it, and according to Dr. Bill Williams, they used powerful computers at the time to arrive at the calculation numbers. Surprisingly, those numbers happen to be Fibonacci numbers. 13, 8, 5, and 3, as you will learn later on in the tutorial. So what he was looking for is, if you go through the AIMS box video, you will find more about the fractals and stuff. And if you read the book, they wanted to find out the fractal of the market. So they run those data through the computers, and the computer came up with numbers that they can use to create an indicator which would allow you to see the fractals of the market. Okay, so now let's look at what does AIMS Gator do actually. So basically it is our compass. It shows us the direction of the trend, and it is very much in tune with the structure of the market. It helps the trader understand the trend direction. That's number one. The second point is that it helps you see the current impulse waves of the market. So that's also important. You don't have to go into the details of Elliott wave. If you know how to use the Gator, you would be always in some kind of an impulse wave when the Gator is open. And it helps the traders stay in line with the trend of a higher time frame as well. So the Alligator will keep you in line with the current time frame, but the AIMS Gator will keep you in line with the 5 times higher time frame as well, as long as you trade the setup one. Now let's go through the anatomy of AIMS Gator. So what is AIMS Gator actually made of? So this is the classic picture that I've taken from the book. As you can see, it's from somewhere from 2011. It's the same thing. The box is the same. The candles are the same. The Gator is the same. So this is AIMS Gator. The Alligator itself is made of these 3 lines. The analogy or the metaphor that Dr. Williams has used is an alligator, and it's probably something to do with the way it looks over here. Now, I am not used to seeing gators in my area, so I probably have seen one in the zoo or in the movies. But probably this hump here represents the eye of the gator, and this is the mouth. Kind of looks like this, and looks like the gator is moving with its, its mouth open here. So we call this as the lips of the gator. These are the teeth, and this is the jaw of this mighty beast. So this is the blue line, that's the red line, and this is the green line. Here at AIMS, we tend to follow, just call them the blue line, the red line, and the green line. I think it's easier to understand than the lips, the teeth, and the jaw. And then we have the purple magic. That's the fourth line. Now, this line has a lot of power. This creates the setup one for us. And as we go through all the indicators and all the stuff, you will understand how. So how is AIMS Gator calculated? Now let's find out. So the AIMS Gator is made of 4 lines. The Alligator is made of 3 lines. Gator is made of 4 lines. Each line represents a trend of a certain time frame underneath the current time frame. So basically you start with the blue line, which is perhaps what Williams calls the balance line, which means this is the trend line of the current time frame. And the red is then the 5 times lower, and the green a bit lower than that. We'll go into that further later. The Gator lines use Fibonacci numbers for calculations. And you look at the settings of the Gator, you will find this. So the blue line has, which is the jaws, it's made of, it's calculated using 13 periods, smooth moving average, as you can see here, selected as smooth. And it's calculated based on the median price. So basically you calculate the high and the low of the candle and divide it by 2, so it's the median. And it's shifted 8 into the future. And the red line, which is the teeth, this is the line in the middle. It's calculated 8 periods, shifted 5 into the future. And the green line, which is the lips, we just call it the green line, 5 bar moving average, shifted 3 bars into the future. So how is the green line calculated? Once again, the green line shows the trend of the 10x lower time frame. Calculation method is 5 periods smooth moving average, and it's 3 bars shift to the right of the chart. So if price is here, this will be 1, 2, 3 to the right. Right, so how is the red line calculated? Again, the red line reveals the trend of the 5 times lower time frame. So let's say if you are on the M5 chart, the red line will show you the trend of the M1 chart. Again, the calculation method here is 8 period smooth moving average and 5 bars shifted to the right. And a bit of advanced fractal geometry here. The red line is the purple line of the 5 times lower time frame. So the purple line then would be the red line of the 5 times higher time frame. How is the blue line calculated? Well, the blue line is the trend of the current time frame. It is what Bill Williams calls the balance line, which means that if there was no new incoming information, no more data coming in, the price bars will come and touch the blue line. The blue line will go flat. It's 13 period smooth moving average, 8 bars shifted into the future. Now let's look at the purple line. How is the purple line calculated? A lot of people ask me, and I used to keep it a secret with me, but there's no use. I will tell you. So this is the purple line. As you can see, the Gator is open with green above the red, red above the blue, and the blue is above the purple. Now pointing at this area using that arc, pretending that this hasn't happened. But if we come to the right side of the chart, as you can see, this is actually cut. So it's not going to appear as this. This is going to be like a green here, red here, blue here, and the purple is going to be all the way there. So what is purple? The purple line shows the trend of the 5 times higher time frame. It is calculated by using 34 period smooth moving average, and the reason we have chosen 34 is not simply because we like 34 or we like the red line or something. It is based on a lot of research observation and practical research that we did. So, and it turns out that 34 is also the number used for AIMS wave, or the awesome oscillator. Now, I'm not going to go into too much detail about this, but literally if you go, there's a formula that we use, which is a fractal geometric formula, is that if you want to find the fractal geometric equivalent moving average of a 5x higher time frame, you multiply it by 5 and then find the nearest Fibonacci number. We'll discuss that some other time in more detail. So 2 conditions of AIMS Gator. There are 2 conditions that actually, so this indicator basically has 2 conditions. One is the sleeping gator and the other one is awake. So you can call it the open and the closed gator, or the sleeping and awake. So if you go with the metaphor of the alligator, then the sleeping and awake would make more sense to you, which means when it's sleeping, it's chasing after price, it's hungry. When it's awake. And when it goes to sleep, then price might be inside its tummy, something like this. It makes sense to some people it doesn't. It doesn't really make a lot of sense to me, but what to me it makes this sense is that when Gator is open, that means that price is going away and the averages, obviously moving averages, are lagging, so they lag behind, showing this open Gator. And when price is not moving in one direction, like you can see here, going sideways, and you can also see that the box is getting tighter and tighter, so you have the stepping down here and stepping down here, and then it's going sideways. So Gator will sleep. Around this time, your purple has not yet reached the box, and as you can see here, sleeping Gator, blue dot. This is a picture of a perfect setup 1. You will go long around here, and so we want to use the awake Gator followed by a sleeping Gator, tight box and cross of 0 line. So if you have watched the other video of AIMS wave, you would have seen that close to 0 line is an important factor. So sleeping Gator and close to 0 line are 2 connected things. So let's go through what is a sleeping Gator. So from this picture over here, you will see that the green line has gone below the red line, and later on the red line has actually been going sideways, and it's come or touched the blue line. So for us, the initial condition of the alligator, its mouth closed, or the gator closed, would be when you have an open gator like so, and then the first time that green line touches the red line, it can be then considered as a sleeping gator. But that's the first phase of the sleeping gator. And when the green line touches the blue line or the red line and it mingles around here, that is the proper sleeping gator. This is what produces the opportunity where you can actually predict the next breakout, and using the purple line you'll be able to do something magical with this. Gator is considered to be sleeping or closed when the 3 lines are intertwined. So what is then an awake gator or an open gator? The gator is awake or open when its mouth is open, and that is when green line is above the red line and the red line is above the blue line. That means gator is bullish, open to upside. And when it's above, all these 3 lines are above the purple line, then you're looking for longs only. When the 3 lines are not touching each other, that is the open gator. Why is sleeping gator important? Now, this is the question. The sleeping gator is the tipping point from where the boulders roll down the hill. As if you were to suppose that you had big rocks, boulders at the top of a mountain. If you were to roll them from there, they would build momentum, and in a few seconds nothing would be able to stop them. The butterfly flap of the butterfly principle starts here. So this is connected to the AO close to zero line concept. It is the point of equilibrium. This is where the trends and the sideways kind of happen. So you look for the sleeping gator because that is where new trends begin. Consider it as a tipping point at the peak of a mountain, a balance point, a pivot point, right? If you were to push that boulder from the peak of the mountain, it wouldn't require as much energy as much as it would gain as it rolls down further. And then at a certain point, it will be very difficult for anybody to stop that. We take trades when AIMS wave is close to the zero line, right? And we then combine that with AIMS Gator sleeping with purple correct. Now this is the important concept that we will talk about now. So the AIMS wave is the most important indicator in terms of momentum and wave counting, but the AIMS Gator is the most important indicator in terms of trend confirmation, entry and exit signals. Now we talk about what is purple correct, and this is what makes AIMS Gator so different to the normal Alligator. So the sleeping gator used to be our indication to set a bracket order. So the bracket order was something like you see a sleeping gator, you set a buy order and a sell order at the same time, and we used to say that, as per Mr. Williams' teaching, that we don't care which way it goes, we just want to be in the trade when it breaks out. So we would set a buy and sell order on each side of a sleeping gator, would be a range. So this would be a bracket order, a straddle if you want, if you like. But thousands of trades later, now we have found out that the correct way of trading the sleeping gator is not the bracket. There are ways to do it in the bracket method, but the bracket method has a problem, which is that you will have a very low win rate, and beginner traders find it very difficult to deal with that. So the correct way is to keep trading away from the purple. You want the sleeping gator, but you want it to go away from the gator, and we'll go into it now. First, you want the gator to be sleeping. For buy orders, you want purple to be below the sleeping gator. And for sell orders, you want purple to be above the sleeping gator. Don't worry, I will go through examples in a bit. So, gator buy signal. As you can see, I've just printed here the normal gator without the box and the AO. But the point is that after you've seen the gator open like this and away from purple, and then it sleeps, this is important to see. First you need to see this here and then this. You will be going long around here. Right? So the gator sell signal will be when the gator, green, red, blue lines are touching, but purple is above it, like this. And then obviously if you are looking for the setup 1 using our method, you would have the box indicator, and the box would probably show you a box like this over here. And then you would put a sell order here and a stop loss there, and you will trade this bit. Now, would you believe this is the same image? This image and this. It's exactly the same. Last night I took this picture. I think it's Brent oil M15 chart or something like this, or hourly chart. I took the picture and then I flipped it vertically. It's this. Same thing, and that's how the markets are. They're exactly the same, fractal geometry. Right, so this is a picture of a perfect setup 1. It is essential to understand this concept of sleeping gator and purple correct in order to understand the setup 1. So, as you know, if you have seen the AIMS wave video, if not, you should see it, you should watch it. This is where wave is close to zero line. Now, this close to zero line is not important until and unless you arrive at this point, when you see a peaking, AO peaking with gator open. So these two things are connected. So when gator is open and an impulse wave is going like this, the gator would open and AO would peak. And as it loses momentum, AO would show you that it's losing momentum by showing divergence. As you can see, there's divergence here. And then price goes sideways. As market is not printing new highs, it would box itself. There's a term you will learn about in the next tutorial about AIMS box. So the market boxes itself, Gator sleeps, AO is close to zero line. This becomes the setup one. So you get blue dot, you go long here, you have stop loss here, and then you have the target zone 1 printed using the fib expansion target zone 1. You'd go long here, probably add on here, and then exit either following trailing the box, or you would have your target point just below the target zone 1. So that is what Gator does. Your understanding of the setup 1 relies on your ability to read AIMS Gator and its purple line. I said a line like this about AIMS wave in that tutorial is that your understanding of setup 1 relies on understanding how to read momentum and count waves using AO. And it also relies on your ability to understand AIMS Gator, how the open Gator and then sleeping Gator, and how the relationship between the Gator, the Alligator lines and the purple line. The purple correct is something that we found and we have implemented it in 2014, then stressed upon it more in 2016 and more, is that it just takes away 80% of your losers. I cannot put enough emphasis on this point, so please understand it. The purple correct. Other things, AIMS Gator helps with Elliott wave. You can learn the secret method, count Elliott wave within 10 seconds. Download a free guide if you like. Go to www.go.itradeaims.net, or the link will be in the description if this video is on YouTube. Right, so this was a brief introduction to AIMS Gator. Further details and training given inside members area of AIMS Stress-Free Trading. If you haven't joined us, please join us. Go to our website. Before we finish, let's have a look at some charts and see how we use this brilliant indicator, the AIMS Gator. Right. Now I'll use the same charts which I use for AIMS wave because that would make more sense, I think. So this is a nice breakout, wave 5 towards target zone 1, like we saw in the picture above. You can see here that as when AO was peaking in this impulse wave up, Gator was sleeping here, it broke out, and then it was open, and then we waited for it to sleep. So as the green line touched the red line, that will be our first phase of sleeping Gator, but we don't take anything here. Why? Because the AO has not crossed the zero line around that time. And then when it properly sleeps, AO has already crossed the zero line as well. Then you get a tight box. You would go long around here. If you didn't go long here, then you would go long above here on the blue dot. The green dot is the setup 2. So according to the flow chart, you would wait for the fresh box, which would have happened a little bit later, and you would have taken your trade here, stop loss here. But if you traded it later, you would have timed it with the fresh cross of zero line. Blue dot, Gator opening. You have your first entry here, and your add-on is above this high. And then you would follow it towards target zone 1. Here's another example of setup 1 trade at London Open. It hit 2% target, which is a 2R. Now here it's a little bit tricky. It's a bit different method of, it's called the Lobot, the London Open breakout method. Here we already see a wave 3 down, followed by a wave 4 sideways. Let's not talk in waves, okay? We have, if that is what you think, if you don't like waves, let's talk about it this way. Gator open, AO peaking, then Gator sleeps or closes. Purple is still above the lines. Now if this purple was above the box up there, it would be a lot better, but if it's still inside, not a problem, as long as it's not mingled or touching the green line. So it hasn't touched anything, and we would take this breakout towards target zone 1. Here's another example of dollar-yen M1. So we have seen a strong breakout. So up to this point, let's see this. Purple is mingle with the Gator, price is going sideways. That means that the trend of the current time frame and the 5 times higher time frame, it's going sideways. So we are not interested. We wait for the breakout. So in the past, we used to think, oh, we missed the breakout and blah, blah, blah. But then we found out, no, you don't necessarily have to trade this breakout because there's a price to pay. To cash this breakout, you have to have brackets all around here. And then to make it profitable, you have to then manipulate the lot sizes and stuff. And you have to come up with add-on methods for this method to be successful in the long term. But instead of that, if you just let that breakout happen, so AO would peak here and then wait for it to cross the 0 line and Gator to sleep, let the purple be above the sleeping Gator in this occasion. So you'll have your stop loss there like it is. And you have your entry here. I think entry is a little bit late here. It should have been here. Maybe it slipped. And then you draw your target zone, which is the Fib expansion 62. And you put your target point there. This got us a nice 2%. I took this trade and forgot about it. That's what I say. This does not require hard work. Why? It's the same thing. Let me go back. So $yen. Took this here. If you have ATM, or if you don't have ATM, another script, or just manually, just let it hit your target point. So as soon as I took this trade, I didn't have to look at it again. I just forgot about it and it hit its target. There we go. So 99% of impulse waves happen when Gator is open. That is the figure. One more example. Taken from yesterday's chart. Yes, this is DAX. Now this is US 30. So we see a 3 down or an impulse wave with Gator open. Then the Gator sleeps, as you can see, the first intersection and then the second intersection here. AO crosses the 0 line. You get a box. You make your entry here, make an add-on, and it goes down and hits your target point. That is AIMS Gator in line with the box and the AIMS AO. And so that's it. I hope you enjoyed this and see you in the next video.